Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's check out what is going on the euro again. So currently the situation stands really tricky on the euro just because of the background that we have and the technical picture that not quite match to the background, because on the technical picture you could see not really bad bullish setup, especially on the dollar index. So if we'll take a look, for example, on the daily chart, well, yesterday we talked about it, very attractive candlestick combination that actually represents kind of the big bearish engulfing patch, which theoretically should suggest downward action. The same story on the euro currency. So you can see this really very good performance to the upside. And it seems that in the current situation, chances on the upward continuation looks more preferable. So as we have said yesterday, so this could be minor downward continuation and then upward price action. But yesterday we said that we should keep an eye on the possible grabber, and today the grabber stands in place. So take a look. That's the grabber that we have talked about. So let's find out what's really we have on the market. First, let's start with the bullish background on the euro. What's the reason for this upward action? Mostly this is geopolitical news. That's in fact the same old song about China tariffs, some unrest in Hong Kong, which has really limited relation to euro currency. It's just some emotional overall sentiment that well, the situation in Hong Kong has become better. That means that we should take the more demand for risky assets. And that has led to the upward action on the stock market as well. And finally, the recent story that has been released yesterday that Donald Trump and in general the United States and China agrees to take the new negotiations and the top format right at the beginning of October. And now we see a lot of the positive relations in mass media that, well, this is just superb, this is absolutely new information, and that is just something really outstanding. But guys, this is the old story. How much we already have heard about this new round of the negotiations. So once this new round is starting, Donald Trump cut it out and just imposed the new tariffs. That's the result of all negotiations. And currently, I think that overall background of this recent rally looks a bit artificial. So personally, on that background, I do not want to buy euro. So it's a very short-term emotional reaction with the weak factors, because we do not have something really valuable. We do not see the change in the European Central Bank policy. We do not see some breakout in statistics. We have nothing to support the demand for the euro. And yesterday we also have got the ADP report, which is better than expectations. Today we will get the non-farm, and within the 2 hours we will get the European Union gross domestic product release for the second quarter. So I already have said that. We talked about it. And currently, and today, guys, it will be a really big session, because I am not exclude the chance that market would reverse totally and starts dropping. That's why I will show you this setup that we could follow, but that will be up to you whether you would like to do this or not, because the conservative approach today is to do nothing. Personally, for me, just because if I would follow the conservative approach, I would decide to just see for a data release and then make the decision on the next week in what direction I will follow. Because, as I said, I do not want to buy. But technically, at the same time, technically, the bearish context looks a bit risky because you will have to go against significant short-term bullish sentiment, short-term momentum, upward momentum, and you mostly depend on the statistics that you will get today. Although we suggest that it should be dollar supportive, and these recent artificial driving factors for the for this rally probably will be very short-lived and could be vanished today. But still, this is a bit risky setup that we will discuss today. So if you do not feel comfortable with the setup, you better to stay aside today and just watch for the data release and take the position on the next week when you have all information that you need for trading on the next week. So mostly we would like to take the bet on the grabber, taking in consideration weak bullish background with the having solid overall bearish trend and solid background for the bearish trend that we have discussed within the 2 or 3 weeks already in our weekly reports. We have the grabber that could really make this day. So on the 4-hour time frame chart, take a look what is going on around the week pivot points. So market tested the monthly pivot point, collapsed. Now it stands on also around the weekly pivot point, so we don't have really significant upward continuation. Also, we have the resistance at 10.72, and market has reached. That's bearish engulfing as well. So our task here is to take the position based on this bearish engulfing or daily grabber with the stops above this area, and we hope that market will turn down due to the statistics that we will get a bit later. What's the attractiveness of this setup? The attractiveness of this setup is that you could place very tight stop. So, for example, if you take a position at 10.63, your stop will be 30 pips. So it's not really big stake in the current situation. It's really very, very comfortable. And another attractiveness of this situation. So if everything will go as we suggest, we will take the position right at the top. So in fact, downside reversal could be really very fast if it will follow the statistics and market could collapse really very strong. So that's the attractiveness of this situation. The negative signs, I already have talked about it, that actually here we have not bad momentum to the upside. Statistics could be not very strong, and in this case we will not get the result that we would like to. So that's the risk. Also, we have here the minor divergence you can see with this MACD indicator right on top. So that is our view currently on the euro. We think that this could be a really great opportunity because market, we don't believe with this background that has started in this rally. So it's really nothing. So that's why let's see what will happen, and it will be very interesting today's session.